Hello everybody, welcome to my channel. My name is Tuf, and today we'll be talking about a new company, new ticker, which is PESI, and the company is called Permafix. All the information that I will share with you today are really mostly coming from the platform breakoutinvestors.com, where you can actually dial in for free and get a lot of information about various companies, especially small caps. So big shout out to Aaron Warwick and Florian Buchneck for all the information that I will share today on this presentation. Today's share price is around 11 and I put a potential, let's say, price target of $30. I remind everybody I'm not a financial advisor, but basically this is the current share price. We are near a 52-week high, but there's still a lot of upside. So what is Permafix doing? They are evolving in the nuclear waste treatment. At the moment, they have four facilities. One of them had just started, but basically we'll be focusing mostly on the one nearby Washington State in Richland, because it's near a very big plant, like ex-uranium plant, that it needs to be decommissioned and treated. But before we talk about all the catalysts that will come and then potentially give a big upside, a lift to the share price, I just want to give you basically a DNA card, which will give you all the metrics on this company. So it doesn't look really sexy as of today. Why? Because all the COVID, let's say, phase that happened 1 year and 2 years ago really slowed down all these big projects that usually take a bit of time to get in place. That's the reason why the gross profit actually dropped from 16 million down to less than 10 million and only starts recovering at the moment. Whereas the OPEX have not really decreased from 2019 to 2022, actually increased up to $15 million per year. Regarding the cash, so basically they're not really, let's say, profitable at the moment, almost break even. And that's the reason why you need to look especially at the cash and cash equivalent. And at the moment they only have 2 million, but $15 million of receivable. They pre-announced that it will be profitable by Q2 2023, so that's the reason why I'm not really too worried about that. But still something we need to look at over the next months. The market cap is around $150 million as of today, and with the share price of $11.4. And what else? The gross margin is not really exciting, and the revenue have been stable for the last 4 quarters. Obviously, it's going to ramp up over next Q1. Q1 actually is going to be much higher than Q4, and Q2 even better. So we are really at the inflection point here. If you look at the DNA card today, it doesn't really look appealing. However, the price is really, let's say, the share price is based on the future and not necessarily the current position of the company. So now let's dig into the future projects. I can categorize them in 5 different projects, but the first one is really the big opportunity for Permafix. And basically this is the Hanford site, which was like a site where it was like there to make the uranium for the nuclear weapons. And basically you have 56 million gallons of radioactive waste in this site that needs to be treated. So there's been a big project that already being started and developed to build the plant to treat all these radioactive waste. It's called ITDC. However, it has not started yet. So I can give you a quick update on how it looks like and how they want to treat it. All those tanks, so basically this is the tank farms where you have all the radioactive waste, let's say, stored. You have single shell tanks and double shell tanks. And basically these ones will be transferred into the low activity waste facility that will start in 2024. And through a process of vitrification. So basically you mix silicium with it, put a big, very high temperature and basically melt everything together. To basically be able to solidify the entire waste and basically neutralize the radioactivity. The problem of this process is that it generates secondary waste because of effluents whenever you flush the canisters or things like this that will also be radioactive. Here at the moment there's no facility here able to treat this secondary waste, so it will need to be treated by another company. And guess which company it will be? It will be Permafix. And then we'll go into detail in terms of possible earnings. This operation will start in 2024. Okay, high-level waste facility, we don't speak about that today because it's going to be for much later. So they start first with the low-activity radioactive waste. Just for information, the Permafix treatment facility is actually very close to the Hanford site, around 50 miles distance. So you can see that on Google Maps. Everything is really clear and there's nothing hidden. But that's very important data point for the possible catalyst of revenue, because basically there's no competitor within this area. Okay, so 3 different projects, 3 different subcategories for potential revenue addition for Permafix. The first one is ITDC project, which will be awarded very soon, anytime soon actually. The total budget for this ITDC project is $45 billion, but actually Permafix might get between $100 and $225 million per year over 10 years. Gross margin is quite low, so they might have around $15 to $30 million of EBITDA. Compared to 15 million shares, it can potentially generate, let's say, more or less $1 EPS. Not completely sure. However, there's another, let's say, part of the contract that has been already awarded, or at least confirmed by the CEO during the last call, is the secondary waste treatment. So that's the part that I was mentioning here. Secondary waste treatment will be treated in the Permafix facility here, which is nearby. This one will generate around $70 million per year over 10 years. And the startup will be in 2024, and the full ramp-up will be in 2025. From the call, the CEO, and actually one guy asked in terms of earning per share, so yearly earning per share, they can, let's say, average $3 of EPS. Don't forget that if you had at least a good 10p on that EPS, you get at least a $30 share price target. Okay, that's the reason why on the first page you saw $30. So that's given. This one is at least given. However, it's going to be starting only in 24 and full revenue in 2025, so within 2 years. There's another project that is actually also ongoing, which is actually in parallel of ITDC. So this is one way to treat the wastes. But another alternative way to treat the radioactive waste is to go through a different technology, which is TBI, Test Bed Initiative, which is basically grouting the wastes. PESI has been awarded a testing, let's say, phase, so where they will be treating 2,000 gallons. That will be starting in the end of this year. And based on the results, they will be able, the Department of Energy, DOE, will be able to give the green light to treat more quantity. So that can be done possibly, can accelerate the process pretty quickly, and then possibly, hopefully, maybe within the next 2 years after, to start producing at bigger scale. At the moment, the plant is already built in Richland, the one that I was showing you just before. So at this current capacity, they could generate up to $0.75 of EPS at the current capacity. They can triple the capacity with very minimum amount of capex, which would give potentially a multiplying of 0.75 multiplying by 3. So that could generate even higher EPS if you add up the other ones. So next project opportunity is the OSMS project, which is located in Ohio State. From the earning call, the awarding will be done in Q2 this year. There's not really much detail about the potential earning, but what we know is that the total project, let's say investment, will be around $3 billion project for reconverting the UF6. Okay, so even if Permafix get a little amount of that can still generate very nice additional revenue. Now number 3, on the future project, the Joint Research Center in Ispra, Italy. So that's a different type of business. This is basically the treatment of nuclear waste from Europe. Okay, so that was a research center that I think that was just stopped like decades ago, but needs to still to be treated. They can send potentially all this waste to US via boat and get it treated. The awarding as per the call also was will be at least actually mentioned as being awarded any minute. So obviously it's going to be April, considering today is one of the last 2 days of March. But also it can give a potential entry door for the other or European side that actually they are treating already some of them. We don't really know the earning per share, but additionally, I mean, they have the plant, they have a very fixed OPEX. So anytime you have additional revenue, basically this is hopefully not as much that can go to the bottom line because they still have a low gross margin. But still, so here the potential revenue for this project will be $15 million. Another one which will be from the call, another potential revenue stream will be the closure of the uranium mines. Apparently there are 180 abandoned uranium mines, and one award has been won by PESI, and the revenue will be $1 million in 2023. Okay, so this is very minor revenue stream at the moment, but that can apparently expand very quickly over the next years. Finally, on the last project is going to be the US Navy decommissioning. Again, on that project, the awarding will be very soon, this summer for the first RFP. And apparently there are 12 nuclear ships to be decommissioned within the next 4 years. So they are located on the east side of US in Norfolk Harbor. So you can see that there's a lot of different projects that's going to be actually unlocked pretty soon. And now that the COVID has been cleared, and they took some delays, so that's why maybe there's going to be an acceleration of approval of this and implementation of all these projects. So if you look basically the different possible EPS addition, let's say as a minimum you can have $3 of EPS by end of 2025, plus adding potentially one here and another one here. So you can, and the other project that we don't really have too much details on that, but basically you could run actually for a very long time with the EPS between $3 and $5, I would guess. Well, that's just an example of the different canisters for the vitrification that they put in stainless steel. Then after they move to the Hanford site for storage. This is the facility in Richland, so that the one close to Hanford site. You can see that on Google Maps also. And just go to the conclusion now. I don't want to make too much blah blah blah. So basically, to summarize, Q2 has been announced to be going to be profitable, so that's usually an inflection point for the share price. Secondary raise treatment will secure $3 EPS by 2025. That's also a very good for more than 10 years. There are still also multiple catalysts for big independent project coming very soon. When we say soon, it's April, May, June. The ITDC, as I mentioned, the GRC treatment in Italy, the OSMS project in Ohio, and the US Navy boat. Also, when we were mentioning about the TBI grouting, you know, the Hanford sub-opportunity for TBI, they can really expand the plant, let's say multiply by 3 the output of treatment by investing very light capex. That's what the CEO was mentioning in the last conference call, and that's really good. So it means that more revenue, but not so much capex. Number 5 is the high barrier to entry business. Obviously, you are in the nuclear waste treatment. This is not selling shoes in a retail store. So the moat will be protected. And this is also the only small competitor in this industry which can benefit from special, let's say, awards in the government contracts. That was mentioned that. Also potential inclusion to the Russell 2000 for 2023, which will be end of April. So if the share price reaches $13, it might boost the share because ETFs will have to start buying also a part of these shares. The best way out for this company is possibly a early buyout by another competitor as soon as they receive the contract award. So this is something where we'll have to keep an eye on. Also, I think there's also 10% ownership of the insiders. So it means skin in the game, and it means that the management is involved in the decision that they are making. The only cons that we see is potential delay, from the Department of Energy for the green light for approving the startup of ITDC or other projects. It's not under PESI control, Permafix. Also, they might have to need to raise a little bit of money until Q2, but not much, so I'm not really worried about extra dilution. Maybe they can get some debt. And also the possible risk, as in any industry, whenever you have a process ongoing, you still have some risk associated with it, and that can always cause extra delay if consequence. So I think that's it for the conclusion. Again, if you want more information, go on breakoutinvestor.com. You're gonna have many more details. I'm not an expert on that. It's just like I wanted to be just a messenger of this interesting opportunity, and I hope you like it. And then really, I encourage you to do your own due diligence before you start investing in this company. Anyway, I hope you have a good day, and then I see you soon for another ticker. Ciao, bye bye.